I make well over $100,000 per month day trading, and in this video, I'm going to show you exactly how you can 12x your day trading profits. Over the last 3 years, I have gone from an absolute beginner to someone who makes good money trading. The best part is that my strategy allows for me to do two things. One, it allows for me to stay profitable regardless of market conditions, and two, it allows for me to only work 1 to 2 hours per day. And in today's video, I'm going to show you exactly how you can apply my 3 principles to 12x your profits and work less. What are those principles? 1, identify the range that price is currently in, with the upper bound level being resistance and the lower bound level being support. 2, take entry on calls on a 5-minute candle close above resistance and take entry on puts on a 5-minute candle close below support. 3, implement an emotionless risk management system that prevents your loss from being greater than your wins. Now, if you want to learn everything I know and trade live with me every single day, click the link below to see if you qualify. So without further ado, let's jump right into the charts. Now, the first thing you might be wondering is, doesn't price find a range and leave a range a dozen times per day? And if it does that mean that you're taking 12 trades per day? Well, the answer to the first question is yes. It does quite often find a range and leave a range multiple times per day. The answer to your second question is no, I don't take 12 trades per day. So if that's the case, are there some setups that are better than others? And how do you find those better setups? Well, the answer to the first question is yes, there are some better setups than others. Second question is, how do you identify which setups are better? That's exactly what I'm going to show you today so that you can 12x your day trading profits. Now, the example I want to show you today is the price action from one entire day. Now, this day in particular is a good day to show you price action because price actually did find several ranges and left several ranges. However, there certainly were some setups that were better than others. Let me show you exactly what I mean. So starting off, principle number 1, finding your levels. The first part in finding levels on any given trading day is to look at pre-market price action. And what I saw from pre-market price action is that we had quite a bit of a sell-off from the aftermarket in blue to the pre-market in yellow. At that point, I wanted to identify what range did pre-market price action identify. And so I initially marked the pre-market open as our pre-market high right around here at 629.50. However, price pushed quite a bit further down and found a pre-market low right around here. And so I marked the pre-market low right around 624.88. At that point, I noticed that the pre-market price action came up and developed a swing high right about here. And so given that there was quite a bit of room between pre-market open and that swing high, I marked another level at 627.71. At that point, I had identified the initial price range that I was going to predict that price would trade in once the market opened at 9:30. However, what happened? Right off the first candle, we left that range. And if this strategy allowed for taking entry on that first candle, that would have worked out very well. However, with this strategy, we do not take entries until right around 9:50 or 10 o'clock. The reason for that is price remains so volatile at open market that often the initial price range is not respected. And so even though this would have worked out as a good entry for puts, we did not take entry at that point. So what did we have to work with after that? Well, price did not find another level of support until right around here. And so I immediately marked that level of 621.33 as our potential level of support. At that point, we had a very clear price range and we were looking for puts on a 5-minute candle close below support. However, I want to show you 2 additional principles that help me select better setups from those that aren't so good. And what I want to teach you today is 2 things, F and D. Now, what do F and D stand for? Well, my brother-in-law is a firefighter, so initially I think of fire department, but that's not what it stands for. What it stands for is firm and draw. What exactly do I mean by firm, first of all? Well, in this strategy, we want to take entry on 5-minute candle closes above resistance or below support. But after testing this strategy several times, and I'm talking hundreds of times, what I realized is that the best entries is when you can have a firm 5-minute candle close above resistance or a firm 5-minute candle close below support. What exactly do I mean by firm? Well, quite simply, Anytime a candle develops, you will see both a body develop and a wick develop. And at any point, that wick represents how high price distributed in that candle and how low that price distributed in a particular candle. The body simply represents where price was at the entry point of that 5-minute candle and at the end of that candle. Here's an example right here. This candle right at 10 o'clock opened at the top of the body of this candle and closed at the bottom of the body of this candle. However, throughout this candle, price actually distributed all the way down to the bottom of this wick here at 619.66. For a candle to be firm, in particular for a red candle to be firm, the body of that candle needs to be longer than the lower bound wick. You can see very clearly that this candle, the body was quite a bit shorter than the wick. And so this candle close was not firm. What I mean by that is price actually distributed all the way down to 619.66, but then didn't close until 621.03. Why is that significant? Well, in that particular candle, because that lower wick was so long, it actually closed with momentum moving up. You can see if price came all the way down here, but then closed all the way up to here, there was a significant amount of buying pressure. That was not a firm 5-minute candle close. So even though everything looked great, and this should have been an entry on puts, because the candle was not firm, we did not take entry. And you can see, even though price did distribute down a bit on the next candle, we may have gotten a little bit of profit off. That weak candle signified to us that there was going to be buying pressure. And in fact, there was significant buying pressure. As you can see, we had 5 successive green candles right after that. So by applying that extra principle of needing a firm 5-minute candle close, we were able to avoid potentially a trade that would have stopped us out. After that, what happened? Well, we did find an area of selling pressure and found that price may be looking at an upper bound level of resistance right here at 621.58. So let's mark that. When price came back up into range on this green candle, we're looking to see if we could get a firm 5-minute candle close above resistance. This next candle had quite a bit of distribution on its body, but it also had quite a bit of retracement from this wick. Now, if you do the math, the body and the wick were about equal, and so this entry would have been okay. However, looking back, this in fact was again a weak candle close because this wick, now that it's a green candle, we're looking at the upper wick, this wick was longer than this candle body. And so this wasn't quite a firm 5-minute candle close above resistance. And so at that point, we are looking at an upper bound level of resistance right at the top of this green candle. Now, the next candle you can see had quite a bit of distribution up from its body and was significantly longer than a wick. This was a firm 5-minute candle close above resistance. This was the better entry on calls, and you can see price did distribute all the way up. This was a full trade. Now, I want to talk about the second key element, and that is draw. What exactly do I mean by draw? Well, at any point when you leave a price range, oftentimes we will be able to identify what is the overarching level of resistance, meaning where did price run into selling pressure above resistance? And there's also going to be information on the lower bound level of support, meaning where did price run into buying pressure below support? And if there's a lot of room between where that candle closes and the next area of either overarching resistance or underlying support, that is good draw, meaning there's a lot of draw for that price to go before it runs into either selling pressure on calls or buying pressure on puts. Now let's identify what the draw was on this particular candle. We always prioritize most recent price action in determining our draw. Well, what did we see? We had not seen an overarching level of resistance until all the way up at pre-market low. And so most recent price action moved very cleanly through this range. And so we can predict that this particular entry had really good draw. So F, firm 5-minute candle close, and D, good draw on price. And so we checked both firm and draw on this entry, and we got a full trade. Now, at that point, we did find resistance right up here at 623.83, and so I will mark that level as our new level of resistance. We have established our new range. And what did price do? Well, it actually turned around and came down and found support at this other level that was resistance. And so we have identified both resistance and support in that particular range at that time. And so we could identify that if we had a firm 5-minute candle close below 621.93, we could potentially be looking at some puts. And at this candle right here, we did in fact get a firm 5-minute candle close. So we checked off that this candle was firm. Was this an entry? It actually was not. And the reason is quite clear once you see where all these levels are marked. We did get a firm 5-minute candle close. However, we closed right at this key level that was resistance and had evidence that was also going to be support. And so because we closed just a penny above that level, we did not take entry because we did not like the price draw. Now, what happened? Well, we had a little bit of movement down, but certainly not enough to have a full trade. Certainly not enough to even get part of our positions off at about 10%. And so we were able to avoid that entry. Next, what is the new range that price could potentially be in? Well, we saw some very clear reactions of selling pressure 1, 2, 3, 4, 5, 6, 7 times as price came down through that range. And so I marked right at the top of the selling pressure right here and identified overarching resistance at about 622.40. And so while I'm adding a lot of levels on this chart, each level is going to be significant in determining both firmness and draw. And so what happened next? Well, when we had the buying pressure, we actually cleared 1, 2, 3 levels of potential resistance and closed right up around here. 2 questions. Is this candle firm? And do we like the draw above it? Well, you can see certainly the body of this candle was longer than this wick, so it was firm. And what was our draw? Well, we didn't see significant selling pressure until all the way up at the top of this swing high here at 623.83. And so this was a firm candle and we liked our draw. And so in fact, this entry on calls was a fantastic entry. And what happened? Price distributed all the way up to our overarching level of resistance. What happened next? Well, price confirmed 1, 2 times that indeed 623.83 was going to be a key level of resistance. And so what did we look for next? Well, we were waiting for a firm 5-minute candle close above resistance. And what did we get? This candle here, the body was significantly longer than the wick and it closed above resistance. And we did not have any evidence from recent price action that price was going to run into any selling pressure all the way until pre-market low up here at 624.87. And so again, this was another good entry on calls. And what happened? Price distributed up and you would have gotten at least half off, if not 3/4 of your position off for another positive call trade. And so at that point, price did react off of pre-market low. And so the range that we were in was 623.83 as support and 624.87 as resistance. And so we were looking for either a firm 5-minute candle close below support or above resistance. Well, what happened next? This candle did indeed come down and test support, confirming that it was going to be a key level of support, and we had a firm 5-minute candle close below that level. However, you can see that price did react off of an area that looked like it could be underlying level of support. And so in fact, this was not an entry on this candle right here. However, the next candle did in fact close firm below that level, and we looked to see what our draw could potentially be. Well, we didn't have any evidence from recent price action that price was going to run into any sort of buying pressure until all the way down at 622.40. And so even though entering on this candle would have worked out very well, the better entry was actually at the close of this candle. What happened at that point? Well, price did retrace a little bit, but with our emotionless risk management system putting in a 10% stop, we had plenty of room for price to retrace all the way up to this key level of resistance. It did not quite reach that, retraced back down and distributed down again for another good entry on puts. We saw price react to this key level of support that we had identified here. Next, we were looking for a firm 5-minute candle close below support. Well, we also have to look and notice that there was selling pressure at the bottom of these candle bodies. And so we marked that level at 621.02. And you can see that this candle did actually close right at that. And so even though this was a firm 5-minute candle close below our most recent level of support, this was not an entry on puts. And you can see price did in fact retrace a little bit, and we did not get a firm 5-minute candle close until this next candle at 110. And so looking again, was it firm? Yeah. 2, did we like our draw? Well, in fact, we did, because we saw that there was not buying pressure until the bottom of this wick at 619.65. And so this was another good entry on puts. Well, what did price do? Well, it took a while, but in fact, price did distribute down a bit. And when it retraced, it never closed back above 621.02, which was support and now acted as resistance. And so even though it took a number of candles, we actually were able to get price to distribute down to the low day down here for another successful put trade. And so where were we at that point? Well, we were in this range with support being 619.65 and resistance being 621.02. The next thing we were looking for is a firm 5-minute candle close above resistance or a firm 5-minute candle close below support. Well, what we got was a firm 5-minute candle close above resistance. In this particular case, when looking at draw, even though we have a bunch of key levels that we saw price react to early in the morning, we actually want to prioritize most recent price action. And what did most recent price action show us? Well, it showed us that price moved very cleanly down through this range. And even though we had some buying pressure and selling pressure at these levels, you can see that there actually was not significant overarching resistance. And so I'm going to remove that line right here. And we did not see any sort of selling pressure in most recent price action until all the way up at 622.37. And so in fact, because this was a firm 5-minute candle close, both above resistance and above overarching resistance from most recent price action, this was another solid entry on calls. And what did price do? Well, in fact, it used that level that was resistance as support again and pushed price up for another successful call entry. And so at that point, we are able to identify where the next level of selling pressure was, which was at the top of the swing high right here. And so what were we looking for after that? Well, we had a pretty clear price range, and resistance was at 623.04, which we saw most recent selling pressure, and support being 622.37, which we saw price react to a number of times throughout the morning and also the afternoon. At that point, we were looking for a 5-minute candle close below support or a 5-minute candle close above resistance. And most importantly, we want to look to see, is that candle going to be firm? And do we like our draw? Well, the next candle did distribute down, and it was a firm 5-minute candle. So it checked number 1, it was firm. 2, did we like our draw? Well, we saw very recently that price reacted a number of times, 1, 2 times as support, 1, 2, 3, 4, 5 times as resistance. And our draw was only from about 621.20 to about 621.02. We did not like our draw, and so we were able to avoid this entry right here. What did price do at that point? It did in fact react to 621.02, and we were able to avoid a losing trade. Again, price had identified a range it was in, and that range was 621.58 as resistance and 621.02 as support. And so again, we were looking for a firm 5-minute candle close above resistance or a firm 5-minute candle close below support. Price did confirm the 621.58 as resistance a number of times, and we did not get a firm 5-minute candle close until this candle right here. And it was in fact firm. However, when we looked to see what our draw would be, we noticed that price had reacted off of this key level of 622.37 from the morning, again, 1-2 times fairly recently. And so we did not like our draw, and so we did not take entry on calls at this point. At that point, there was only about 40 minutes left in the trading day, and in the last half hour, price gets very volatile, and we avoid that last half hour of trading. And so we were able to close up charts at that point. You can see, just by adding those two principles of firm and draw, we were able to identify which setups had the highest probability of following through and which setups were likely going to run into either overarching resistance or underlying support. And so just by adding these two principles to my 3 principles of finding your range, taking entry on 5-minute candle closes above resistance or support, and implementing an emotionless risk management system, we were able to have an outstandingly profitable day on Friday, August 1st. Now, getting back to the promise at the beginning of this video, how do you 12x your profits with this trading system? I'm going to show you right now. If you're able to successfully implement the 3 principles that I talked about today and add the 2 extra principles of ensuring a firm 5-minute candle close and looking for a good draw on your trades, you will have returns like we do consistently every single week. What are those returns? We have consistently had a 70% win rate, and we consistently get about 13% gain on the trades that we win. What does that mean as far as a weekly profit? Well, in a week, we take approximately 10 trades, and here's what that looks like. We always implement a 10% stop, and if you look at 7 trades that are successful for every 10 trades at a 13% gain and 3 losing trades at a 10% stop, you will earn about a 61% gain on what you risk every single week. Now, starting out, you may want to consider having about a 10% leverage, meaning that you're only going to risk about 10% of what your overall account is when you start out. What does that look like? Well, let's say you start at $10,000 and you get about a 61% return each week on trading with a 10% leverage. That is about a 6.1% gain each week. At the end of each week, you scale your account, including all the profits you made, and you repeat that process. Well, in that first month, your $10,000 will have gone to $12,672. Now, let's say you get comfortable with that process and you feel like you'd like to increase your leverage to about 20%. What does that look like? Well, taking that $12,672, doubling your leverage, so going from a 6.1% gain to a 12.2% gain, taking about 10 trades per week, and then scaling your account each week, doing that 4 times per month. After 5 months, here's what happens. Your $10,000 would have turned into $126,000. And if I do my math right, that is well over 12xing your profits. If you got a lot of value out of this video, please subscribe to my channel. More content coming every week. And by the way, if you want to learn everything from me and trade alongside me live every single day, click the link below to see if you qualify. See you in the next video.